So, like I do each day, I'm going to start this show with the chart. That is great news. Okay, so if you're new to my channel, all you have to look at is that number right up through there. See, it says 28. That's good news. The number's green. That means mortgage rates are going to go down. The bigger the number, the bigger the adjustment. A 2-day chart. This was today's chart. If you go to a 2-day chart, let's go see what that looks like. Fantastic. Okay, so here's what's going on with mortgage rates, folks. If you go to a 5-day chart, we're back to where we were before the Federal Reserve didn't cut rates. So last week we were right here. The Federal Reserve didn't cut rates. Rates, as this goes down, rates go up. And rates went up, 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 and up. And then what happened this week? Well, we got a good CPI reading. Consumer inflation came in. Fantastic. It actually is negative. So we had a nice little rally in bonds. And then we got producer inflation today to back up kind of no inflation out there. If you take out food and energy, and then bond market is rallying. So if you're new to the channel, by the end of the show, hopefully you're going to understand how this plays a role in these things over through here. So folks, my name is Dan Frio, and thanks for joining me this evening. I'm here to answer any of those questions you guys have out there. If you're a first-time home buyer, you're looking to refinance, I'm going to give you some tools at the end of this. It's 100 degrees out there. So I'm doing the show just to stay in my basement, to stay cool. Hopefully you guys are staying cool out there, and hopefully even if you can't join me now, you can join me later. But all this information is going to be relative. So first off, let's go to my channel. If you're a new home buyer, let me know if you guys have any questions as you come in, but I'm just going to give you the tools that you guys need. And if you could be a realtor or loan officer, these are tools you guys can use as well. So here's what we want to go through. We will first want to go through, okay, when everybody starts looking at homes and things like that, they want to see where interest rates are going to go. So if you go to our channel, we created this thing, and the links are down below. If not, go to our YouTube channel. You'll be able to find these things as well. But this is actually what we created. It's actually going to give you interest rates across the board from 30-year fixed all the way down to FHA, VA, things like that. But here's the interesting thing. It's going to give you the data that you need to watch on a daily basis. You watch the 10-year Treasury, the bond that I showed you previously, that's the mortgage bond that trades on Wall Street. They kind of have a correlation, but I, as a mortgage advisor, I watch the MBS. If you're a loans advisor, I think I have the subscription down to the MBS down through there, but this stuff's free. What you're going to get over through here is also what I want you guys to look at. This is the data that I look on a daily basis. So what I thought I'd do, I would create this website to help loan officers, even consumers out there, understand what's going on with the interest rates. It's not just the banks wake up one day and it's like, poof, here's what mortgage rates are. I want you to understand what really causes them to move. So this is the data, and this is why we created this website. If you go down through here, what you're seeing is today's market movers. What we got today was the PPI. I'm going to go over this with you here shortly with the economic calendar, because yesterday we got the CPI. Think a C in the front of things is consumer, and then there's PI. Think of it as inflation. Okay, then there's the PPI. Think of the P as producer inflation. We got both those this week. Here's the producer inflation, how it came in. Cooler than expected, cooler than expected. So what happened today with rates? They got better. Okay, so I'm not going to explain this to you in a second, but you can go down through here. You can just listen to my most recent blog. You can get a snapshot of where the markets are going. You can see what the economic snapshot is. We're going to go over this today so you guys can understand what really moves interest rates. And the predictions market down here, what the predictions market thinks the Federal Reserve is going to do at the next few meetings. Okay, so here's what I want you guys to understand. Let's just go flow through here. If you got any mortgage questions, you got any questions in regards to maybe your property, just any interesting questions out there, I even have a backup for me right through here. We got ChatGPT. If you stump me or we get kind of in a debate sometimes, we'll just go to ChatGPT and let that find the answer for us. But here's what you have to focus in on was when you're trying to figure out where mortgage rates are going to go. Okay, so it's a mortgage bond that trades on Wall Street. Here it is. Okay, so all you understand is that number up through there. If it's green, that means the mortgage bond price is going up. And if a price of a bond goes up, the yield or the interest rate goes down. Okay, so think of it, price is up, yields down. So it's inverse. So we love when this chart's going up. Well, here's what we had over the last week. So going into last week, here's what we had. We had the Federal Reserve come in, and they didn't do anything. But what everybody deemed what the Federal Reserve guy said, they were like, he's hawkish. Now, you might say, what is hawkish? What is dovish? That's what they call these people. Well, hawkish means they're always on the side of, we need to increase rates. You ever have those warmongers? Every time somebody sneezes, we got to go to war. What's like these guys? Oops, sorry about that. They're saying every time something happens, let's just increase rates. Well, they came out and said, Federal Reserve Chairman Warsh, it was his first meeting, last week, and he came out. A lot of people said, "Oh man, he sounded hawkish," meaning, "Oh, this isn't good news for mortgage rates and interest rates." So what happened is this went down. Mortgage rates and interest rates in general went up, 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 and away, and we're down to here. Okay, so then what happened this week? Well, a lot of people are predicating all this stuff on the economy's dismal because of inflation. Well, let's get over and explain some of this stuff to you. So here's the economic calendar. Here's why the market rallied the last 2 days. The first thing you have to understand, what is inflation? How does oil play a role in this? And then how's the bond market play a role in this? Okay, so first thing is, inflation is the increase in prices over time. What a lot of people don't understand is if I buy an egg today for $1 and tomorrow it goes up to $2, that's just a massive increase. But then if the next year it stays at $2, inflation at that point is zero. But it doesn't mean the egg is going back to the price of $1. So inflation just kind of keeps compounding on itself. That's why the Federal Reserve is sitting here saying, well, we got to do something with inflation because at 2%, this multiplier is going up there. But if you got 7, 8, 9%, well, the inflation is doubling or really crippling your dollar, the value of your dollar. So that's why they focus in on inflation. Now, what causes inflation to go up or prices to go up? Well, the biggest thing we look at is energy, oil. What's it done to your budget? You got gas prices that went from $2 a barrel to $2 a gallon to $5 a gallon. Yeah, it takes a bite out of your budget. That means your dollar is getting less value, and that means inflation is basically going up. Okay, so what this is telling us here, what you see on the screen, why this is intriguing, is we want to look at this and say, okay, what's the culprit of inflation right now? Is it oil? Or is it something else? Like Federal Reserve Chairman or Federal Reserve person from Chicago last week came in. He says it's servicing inflation I'm most concerned about. Everything else is okay. Low hire, low fire. So the jobs market's pretty good. GDPs are ratcheting right now because the AI trade's doing fantastic. So so we're looking at things like that. So what we want to look at now is how much is inflation going up? So what they do is to create a consumer price index, like how much prices are going up. They take a basket of goods and services, and they throw eggs and ticket prices in there, and jeans and airline tickets and all kind of stuff. They throw it in there. They hit and they figure out what the price of that, all those things were. And then they do a future in time. They go and reevaluate those numbers. The price change, that's inflation. Okay, so here's what they're looking at. Today what we got, or yesterday what we got, was the inflation on the consumer side. And it says, okay, consumer inflation year over year is 4.2. It was supposed to go to 3.8. It went to 3.5. It's still over 2. So because of this, the Fed isn't going to cut. But it's going in a nice trajectory. We had 4.2. This was 2 years ago, 8%. So now we're at least going down here. And the wild thing here, and I'll explain to you how kind of some oil's working on this, is when you take oil out of the equation, you get what's called the core CPI. Okay, what core means, it strips out the energy piece. So if you look at this CPI month over month with the energy in it, the last reading was 0.5. Okay, they thought it would go down to basically 0 or minus 0.1. It went down negative 0.4. This includes oil and energy in it. Okay, so that's encouraging in itself, right? This is almost 1 full % adjustment down. All right, the next thing we look at is let's look at the inflation when we strip out the energy, which is when the core is. We went from a 0.2. They thought it would go up again 0.2 per month. It didn't do anything. 0. It was flat. So this is saying, okay, inflation in general is going down. And then if you take oil out of it, it's even getting better. So then the analysts are looking at this stuff and they're saying, okay, well, hold on a second. How much are producers really getting whacked on cost because of tariffs and all the other stuff? Well, that's interesting too, because if we go over to this, the PPI, we're not going to look at the core piece of this, but let's just look at the PPI because it's going to include the energy prices and everything else. Last reading was 0.6. It was supposed to go to 0. It went negative 0.3. Again, almost a 1 point move down. So this is basically saying inflation is out of the picture right now. And with oil coming down, it's only helping the matters. Now, you might say, okay, it's not really helping me. Prices aren't really going down. Again, we just explained inflation. Inflation, the prices aren't going to go back down to where they were. That's disinflation. They're just going to basically stop moving. Okay, the interesting thing here is it just popped in my head. Look up, see if any of these companies are getting any tariff refunds right now. I think they're issuing billions of dollars in tariff refunds. Are we ever going to get it? I'd love for you to comment down below if anybody knows anything about that. So now let's get over to see how the markets are doing today. Love to answer any of those questions you guys might have out here, but here's what we look at on a daily basis too. We look at how the markets are doing. So we look at this to just see, okay, is the economy growing? Is it not growing? What's things look like here? We look at oil for the energy piece. The reason why we watch all these things is if you go over to here, what does the Federal Reserve watch? Well, I'm going to pull that up for you right here. If you go to the Federal Reserve, they're going to look at two things. They're going to look at inflation, and they're going to look at the unemployment numbers. Okay, this is why the Federal Reserve was created, to keep inflation and prices in check, aka inflation, and the unemployment rate, anything under 5% is basically full employment. Over history, if you go back all the way, all the time they've ever recorded this, 4.2 is the average, and that's where we are today. But the encouraging thing is right here. We have a GDP right now that's growing at 2.1%. They're estimating this might be growing at 4%. So if we have GDP growing, we just saw companies are doing very well. That means they're going to hire more people, employ people, or at least keep the staff they have and maybe pay them a little bit more, because wage growth is actually keeping up with inflation right now. Again, it might not seem like it, but it is. Okay, so the thing right now we're going to look at is, here's the inflation. So here's what the Federal Reserve, they're like, we got to stop the inflation from ratcheting out of control. How do we do this? Well, historically, what they do is they come in and they increase rates. Okay, as they drive up rates, that causes me and you, if we don't have any cash, we're not going to spend it now because the credit card rates are too high. We can't get money lent to us, so we just slow down our spending. Well, that's what basically the thought behind all this was. But they're saying, okay, price, this isn't really what's happening behind the scene right now. What's really happening is energy. Our gas prices are really what's making things so expensive. But once it comes out of the equation, we might get back down to where we were before this. So just tidbits out for anybody. The 10-year Treasury, that's what a lot of people follow when it comes to mortgage rates and interest rates in general. It hit a low, the low over the last 2-3 years, the day before the Iranian conflict. Okay, the 10-year Treasury was trading at about 3.99. It went below 4%. All of a sudden, you had a spike. Oil hit $120 a barrel, and at that point, that's when we hit about 4.6 on the 10-year Treasury, 4.66. And from there, oil's come down. That was when oil hit $119 a barrel. From there, it's come down, and from there, inflation expectations are coming down. But we're just waiting. We're waiting on confirmation of this. And here's what I think the markets are waiting for when it comes to when are rates actually going to come down. Because if you look at the numbers, pre-Iranian war, rates were at 5.99%, and oil was about $65 a barrel, and the 10-year Treasury was at 3.99. So let's take that snapshot. So where we are today, well, we have oil back at $79 a barrel, but it's down from $120 a barrel, and all the other indices looking pretty good. So if you look in general, what is the Federal Reserve? Let's get over to see what the Federal Reserve is expected to do at the next few meetings that they're coming out, because mainstream media is coming in saying, okay, they're going to start increasing rates. So if they're going to try to slow down inflation, would they be increasing rates? We just explained to you, most of this inflation is coming from oil. So if you go down through here, you're going to see, okay, the Federal Reserve in the next meeting, there's an 88% chance they're not going to cut rates. There's now a 51% chance they're not going to cut rates at the next meeting as well. These numbers change all the time, basically every day. This morning, I think when we went in there, this number was over here. It was about 48% or 50%. Now it's moving all over the board. These numbers had multiple rate increases. I've been steady during this whole time. So now you might want to say, okay, who do we follow if we're trying to figure out where home prices are going to go? That's where I hope you guys were going. I hope you start asking me about home prices, where they're going, and other things. Because what I did, here's what I was doing. I was trying to prepare a forecast. What I like to do is I like to come in and tell you guys when I was wrong. Okay, a lot of people come in and, okay, I nailed that. I like to come in and say, okay, here's where I missed it, because I want to learn from my mistakes. Okay, so what I've done is I went through and I took all my analysis, my forecast over the last 3-4 years, and I ran it through AI. So I basically asked it, kind of, where's that data here? Who got the housing market right? Okay, so this was interesting. And I took my name out of the equation because I put it in here and I ranked pretty good. But I'm like, okay, I need to do this unbiased. So what I did is I broke it down. I'm like, okay, who got the housing market right? So I ran this through 3 sets of AI because I want to know who to follow as well. I was hoping we'd have a lot of home buyers on here saying, hey, Dan, what's my home prices going to do in my area? What I was going to show you is who you should maybe be looking at, or the data you've been looking for, and what people do you not want to follow? So I just ran this through AI. It wasn't to bash anybody. It wasn't to put anybody on a pedestal. It was just the facts. So if your feelings got hurt on this one because you might be on one of these lists, I'm sorry, but you can run the same data I ran, and unfortunately, you're probably going to pop up on that list. So who got the housing market right? So we got the top 10 forecasters ranked. So number 1 ranked the biggest housing market forecast since 2022. Whose guess was the most accurate? Logan. Now, Logan is a lot of times he's on CNBC and Fox News and things like that, going over his picks. He runs Housing Wire. I also watch or read this every day to just kind of get a gist of what their headlines are, things like that. It's a pretty cool article. They go in depth on some things, but I'll give this one a thumbs up. Then Realtor.com, pretty good. And as you can go down through here, you can see where some places down through here, like NARS, National Association of Realtors. Who do you think would get this the most right if home values is basically your job? Well, the National Association of Realtors, but that is not the case. So I did throw me in here to say, okay, how would I fare? I fared pretty darn good. I ranked in 8.4 out of all these numbers. So go to the top, and I would have came in 8.4. I would have came in ranked 8.4 to 8.8. I would have been right up there at the top of there with Logan. So then I'm like, okay, well, these people have called, and what they got right was they didn't call a housing crash. And they didn't call for fear-mongering, and they didn't call for, catastrophic things. So I was like, okay, go through and pick me the top 10 people that got this absolutely wrong, like the worst of the worst. And it came up with the Gonzo Award. I didn't even name this thing. It came up with this thing. So if you are on this list, or you know somebody on this list, please share this with them. Have them reach out to me. I would love them to defend their position because I just ran AI and this is what it's given us. So if they have, some rebuttals they want to give, I'd be more than happy to have them on the show and go through it with them. But here's I guess the places that you maybe should be second guessing yourself before you go watch. So the first answer, here's where I want to go. A sharper, cleaner vision report ranking the loudest housing crash forecast misses and shows why buyers should follow payments, math, not panic headlines. First, to answer the question, the national crash never arrived. Okay, these people called it year after year. Remember, since 2021 or 2022, it was there. And then it was 18 months away. Now we're in a 2-year cycle, things like that. And it's like, you got to be kidding me. So here's what I want to go through. Housing market didn't crash. Okay, but let's go through the forecast gap. We have Melanie Wright of M3 Melody. Now, I've seen her several times on Real Estate Mindset. She's probably on Michael Borondino. I don't know. She's supposed to be some financial guru who knows economics and everything. She ranked as worse as you can get. The rankings are down through here, and it tells you, basically everything she said didn't come to fruition. Then you got Nick Gurley. I don't know if you guys saw Reventure, whatever that is. He's a 94. Again, if you watch his video, I could probably pull one up right now. I can guarantee it's right now. His video is going to say, it's going to be worse than ever, worse than 2008. He's been using, I think, the same thumbnail for the last 4 or 5 years. Now, my goal isn't to bash these guys. They get hundreds of thousands of views a day. God bless them. But the data you're watching, are you watching it for entertainment? Because if you go down through here, the stuff they're giving you is not fact. It's just basically, fear-mongering. That's the only thing I guess I can say. So let's get over to any questions. Vincent, what do we got for me, buddy? I was hoping we got some home buyers in here so I can answer some questions. I'm a first-time home buyer. Is there a program for me where I don't need to put any money down? There is. Okay, so let's go through it. If you're in the military, give me a thumbs up. I don't know if you want to answer, but if you're in the military, you can get a VA loan with 0% down. Otherwise, there's the only other product that's out there is USDA. You have to be in a rural area. You can't make a certain amount of money. We do those as well. If you need help qualifying to see if you qualify for any of these, let me know. But a lot of times, here's what people don't kind of understand. Many times, if you're a first-time home buyer, you can get away with 3% down. Now, I do surveys all the time. It's like asking people, how much money do you really need down? A lot of people think it's 5% or 6% or 10% or whatever. You need 3% down. Now, I know it can be a lot of money, but what you might want to do is, do you have any retirement, money out there? Can you save up, over the next 2, 3, 4 months to get there? But what I want to make sure you can do is, if you have no money, do you have a little bit of a reserve? Is all your debt cleared up? Because if you get into a house with no money, I can almost assure you something's going to need fixed, or you're going to need something for something. And if that occurs, are you going to miss a house payment and then lose? That's where I don't want you to go. So there are down payment assistance programs. We offer those as well. Here's they're available. Okay, I'll put it that way. The tough thing with those is a lot of times they're enticing because you can see the ads and all the people selling that stuff, but I'm just truth. My channel is the rate update, TRU, true. So honestly, they're not great programs, because what usually happens is you're going to get the second mortgage, if it's forgivable, the first mortgage is going to have a much higher rate, additional fees. If it's not forgivable, there's going to be an interest rate on there. There's going to be payments required, or it'll be pushed off to the end and so forth. But the fees are usually what get you. They'll give you $7,000, but it'll cost you $1,500 in extra fees to get that. And then you have to say, okay, was all that worth it? So yes, there's down payment assistance programs that can help you. I would suggest not going that route unless you have to. And then there's VA and USDA. So reach out to us. We'd love to help you. We offer, I'm licensed in all 50 states as well as Puerto Rico. Let me give you my slogan, not to bore you guys, but I say it every day, and I think it goes over a lot of people's heads. My slogan's one application, one credit pool. We're going to compare your loan to 30, almost 40 different lenders. Now, you're watching the show. Hopefully you're a home buyer, or maybe you're a homeowner, and you're trying to say, okay, I want to get educated on rates and programs and all this stuff. Okay, so what you would probably do, if you're thinking there, I'm going to go online, see who's got the best rate. Okay, you're going to see these same clicks. You're going to go to that place, that place, that place, and then that place is going to sell your loan to about 10 different places. So you're going to have your application in 15, 20 different places. They're going to pull your credit, ruin your credit. They're all going to get back with you with quotes you don't even know what they're talking about anyways. So let me and my team help you. We're licensed in all 50 states. We work with almost 40 different lenders. And the reason why is they all have different rates. They all have different programs. Vincent just asked previously, or you just asked me, is there any down payment assistance programs or things like that? Yeah, some banks have them, some banks don't. We can do all the search finding for you. And we work at a bank, so we can either do it through the bank, or we can do it through basically using the programs of that other lender to help you through this whole entire process. So great question. Thanks for being here tonight. I didn't honestly. I was like, okay, who's going to be here tonight? It's the middle of the week. It's summertime. We're looking for home. Looking to buy. You're out there either looking to buy, you're working, or you're out there just sweating. So thanks for joining me tonight, folks. And hopefully, if you view me afterwards, you get something out of this. Do you know anything about the new housing bill that passed last week? It passed. President Trump hasn't signed it yet. Okay, I'll answer that question next real quick, Taz. It passed. Here's my analogy. I actually did a report on it might even be in our blog. Let me see if it's up in our blog. If you go to my website, you guys probably don't know this. I have blogs. I do a blog. We're on pace right now to try to get one out with every video that we're doing. It's kind of tough. But like here, right today, we had, that's 714. Yeah, that's it. That's yesterday's video. Down through here, where is it? I can't find it yet. Basically, here's my thoughts on this. Here's some calculators we have in the background. So if you guys want any, I'll bring it back to that chart. I was on, basically they're saying it's going to lessen regulations. I don't know how that's going to happen, because I was on the planning commission in the town that I live in. I was on there for about a year and a half, and I'm like, I quit. This is crazy, because you got 90% of the members there that they're set in their ways. They've been appointed by the people that are appointed, and they don't want to change. I mean, it is what it is. So you can make all these legislation things you want. Here's an analogy, and I'm no bash on anybody, and hopefully we got some time. Never mind. Regulations is a huge thing. The next thing is they're going to make it more. They're going to make it cheaper. I don't know how. They're going to make loan programs available. I've been doing this for 38 years. Don't know how they're going to do that. Every time they get involved in housing, like in 2000, they wanted everybody to own a house. So they created these programs where everybody can buy a house. And then by 2010, almost everybody lost their homes. So you need just basically good programs. And if you can buy a house, you can buy a house. And that's what I'm here for. I'm not here to talk you into buying a house. I'm here to just help you navigate these things. The only thing that this could help, and sorry it took me 10 minutes to get here, is the manufactured modular mobile thing that can help. Okay, because we do modular and manufactured homes and things like that. We do loans for those out there. We do USDA loans. So we offer all these programs. They're great homes. I mean, they're good, as good. Maybe some are better than stick built. Stick built means you just built the thing, from the ground up with just lumber. And these other ones come in huge pieces. So those are hard to finance. So if you can bring those back into play, yeah, that's a good thing. But 99% of this, it's just a bunch of fluff to say we're trying to help in housing. Folks, I've been doing this a long time. If there was something there that I could say, hey, this is great, I would be all over it. But it's more just fluff and mirrors behind the scenes. So let's see what you got. So I'm having a house built. Should be done in October sometimes. Should I put money minimum down and then refinance and then put more money? Yeah. Yeah. So there's a lot to unpack there. Is the builder the lender on your loan? Because if they are, I got some tricks that you can do to use lender credits. If they're not, and you're just getting a loan out there, send me your loan estimates and everything. We can review those for you, and I can kind of coach you exactly through what to do. So just reach out to me. My email's down below. I promise you I'll be back. If you just email me tonight, it's pretty simple. It's dan@therateupdate.com. Just shoot me an email, and I will email you back, and maybe we can even set up an appointment tomorrow, or just ask me your question. Tell me if it's the builder's lender. Send me your loan estimate if you have it. I can go through it with you and just send a video back to you, kind of making sense of it. So I can help you out there as well. Let's see, anything else? Yes, cool. So thank you so much. Thanks for asking. So where else are we? Let's go through. I hope you now understand. I got blogs out there. Any other questions? But only getting 3K, dude. Send me your loan estimate, because they probably have an inflated rate on you too. So we'll at least I'll help you either get their numbers better, or we'll help you out. Okay, so here's what I'm advising my clients to do. So you might be asking, okay, with all this stuff going on, okay, now you know who not to follow, who to follow, what the Federal Reserve is going to do down the road, how oil is affecting all these things, and how the bond market's doing pretty well. So why are you really here? Well, you're trying to figure out where's rates going to go? What should we do? So let's go to my last section. What am I advising my clients to do? We locking, we floating, what are we doing? I'm a homeowner, would I refinance? So let me walk you all the way through this. If I'm buying a house right now, as long as you can afford the payment, you have some money in reserves, your debt ratio's in line, you're good to go, buy the house. Okay, if you've already got pre-approved with me, you're in good shape, because we usually get you pre-qualified about 0.25% higher than where the rates are, just in case we have a big spike in rates in any day. So I don't want to make it that you finally fall in love with that house, you put a contract in, then we can't do it because the rates went up 0.25%. So we want to make sure we get you approved the correct way. And then when your contract comes in, what I'm going to do is, because I do this all day, every day, is I'm monitoring this thing. Okay, so as you understand, here's what I would be doing. If we get a contract in on Monday or yesterday, okay, rates are jumping like this, or the bond market's moving like this. Remember, this is going up, rates are getting better. I'm holding. I'm like your stockbroker. If I see a stock price tumbling, I'm not going to just jump in and buy. I want to see a little bit of a reversal. Didn't see a big enough reversal here, so we're going to continue to float. Now we're having a rally. Here's the benefit of this. See all these little dots here? These are telling me every one of the lenders that we're set up with, if they're giving us better rates for the day, meaning they had midday price changes. Here's it in English. These banks just came out with lower rates. So if they had pre-approved you yesterday and I locked you in, you're locked. You're done. Okay, so last but not least, here, let's go back to this. So what do I mean by lock? You guys understand what I mean by lock? If you do, give me a thumbs up. If you don't, give me a thumbs down. I'll explain it. And I use the analogy of a stockbroker with a lot of this stuff. Okay, Floating and locking your rate. You're floating your rate would be the same as you're watching a stock. So right now I'm watching IBM stock. It was down like 20% yesterday. I still think it's a great company. I don't own it. So I'm like, okay, maybe I want to buy some stocks in IBM. Now I'm not advising you to do it. I'm just telling you what I'm doing. So I'm watching it. Well, I'm just going to wait for a little bit of I think I see a bottom, and then I'll go in and I'll buy. I might be wrong, but I might be right. Well, that's what I do through here. So I monitor these rates. I tell our whole staff when to lock, when not to lock. And if we saw you yesterday where we see this rally, again, this is a huge move up. I'm saying this is like a stock dropping. I'm saying hold. And then the stock, think of this. Remember, this is upside down. My stock's dropping. I'm hold. I'm still in the hold pattern. Because now banks are coming back saying, okay, we concede, we're going to start issuing lower rates. So basically, this is how all this works. So I don't have anything to hide. I'm not trying to talk you into buying a house. I'm not even trying to talk you into refinancing. I just want you to understand all this stuff. Okay, so let's get back to it. If you're looking to build, like we have Taz, he's looking to build, or you're looking to buy down the road, should you be concerned? I don't think so. Here's what I say in my videos each day. Watch two things, please. Watch oil. You got to watch oil. That's basically what's telling us right now. If oil goes up, well, that means the cost of everything goes up. Now you understand how, energy, gas, oil goes into gas goes into producing everything. If oil goes up, gas prices go up, the cost of producing everything goes up, that means prices go up. That's inflation. Okay? So watch oil. Okay, and you can see the correlation between oil and rates. The other thing is subscribe over there. Every morning I come in, click the bell, and you can watch me about 5 minutes. 5 minutes of your day, and I'm going to tell you exactly what's going on in the markets, stocks, bonds, cryptocurrencies, and especially mortgage rates. But if you're looking to buy or build down the road, Taz, I think you're in good shape. Watch oil. There will be a resolution to this thing. But what's going to happen is you're going to have a lot of banks in the bond market sitting there saying, okay, we still don't trust Iran. So I had a lot of colleagues ask me today, they're like, so when actually are mortgage rates going to drop? And I said, well, it's when the markets, and when I talk about the markets like the bond market and everything else, they get comfortable with, okay, we think finally Iran's going to play by the rules. And it might take 30, 60, I'm saying it's going to take over 30 days. So 60, 90 days out, I think we're going to see we're going to retest the lows that we've tested back right before the war. So I'm saying we're going to test the 599 lows here probably in the next 6 months. So now that's my analysis to that. So wonder if you're a home owner right now. Hopefully you join me even if you're a home owner. Here's what I'd look to do. If you're just there and your rate's at like 6 and you're like, okay, I really don't need anything, but I'd love somebody to monitor my rate in case rates just drop at some point. So we could do that for you. We just created, and this is now, it's getting revamped, folks. This is going to be called, I don't know what it's going to be called. Help me call this. I think it's going to be called Rate Watch 3.0. where we solve your problems, and you're going to understand a little bit more. But we created Rate Watch 2.2 or 3 now, whatever you want to call this, and here it is. Here's the new one that we just launched actually today. You're going to put in your mortgage information. We're going to track one thing for you. One thing. What's your rate? What rate would you like to refinance? You'll put it in there. So basically, you're going to give me your mortgage information and your rate. Click through here, and when that rate hits there, we'll reach out to you. There'll be other features in this where you can tell me, okay, how much of a monthly savings you would want. We're going to track all kind of things for you. Can we get you out of your PMI, things like that, and that'll be very helpful for you there. But if you're a homeowner right now, and this wasn't meant to be a commercial, I'm here to educate you guys. If you're a homeowner right now, like myself, I have a mortgage on my house. The rate is 2.6%, and I kid you not, it's a small mortgage, and it's 2.6%. And I got a lot of equity in my house. I don't have any bills, thank God. I've been blessed for my life, but you might be drowning in debt, thinking, okay, what do I do? I'm struggling. These credit card bills are killing me. If I pay minimum payments each month, it's going to take me forever. The rate's 28%. But I don't want to turn in a 2.6% rate. So what do I do? This is going to help you, okay? What this will do is you're going to plug in all your information. You're going to plug in each one of your bills, and AI is going to figure this out. And it's going to help you put you into the program. It might come in and say, okay, we're going to consolidate all this into one big, massive bill because financially it makes the most sense to you. But you're going to be able to tell it what makes the most financial sense. I want to save the most money each month because I'm drowning in debt because I'm overspending. So help me consolidate this into one bill that I can afford. It'll do that. We're just launching a program where I can actually pay off my house in less than 10 years. And yeah, we have the program available, and I'm going to have a person with me in the next couple of weeks demonstrate it for you. And it is crazy. And that's one of our systems will do as well. But it'll tell you, that might be the program for you. So these are the things that we can help you with. But that's what we're doing for today, folks. So that's it for today. I didn't expect a lot of people today because it's 100 degrees out there. It's the middle of the week, and it is the middle of summer. But if you're watching my channel, this is nothing but good news. Since the Federal Reserve didn't do anything with rates went up, and they made a complete reversal this week because the inflation numbers are basically completely out of the picture right now. So Fed is now taking the rate hikes off the table, it looks like. I'm still saying 100% chance. Federal Reserve's not going to do anything at the next meeting, the next meeting after that, the next meeting after that, and eventually in 2027, they will start cutting rates, and we'll be testing that 5.99% rate here soon. So that's it for today, folks. Taz, thank you. Oh, Taz, here, let me give it to you. It's Dan at therateupdate.com. There you go. And if you guys want to leave any comments, I try my best to come in after the videos, especially these live events. Floating. Any advice with the lock 930? Hold, float, subscribe, please. I'm telling you that. I'm not supposed to. I shouldn't be telling you to subscribe. Subscribe over there. Truly, hit the alarm. You can even watch. We're trying to put chapters in each one of our things. You can go into each section. Just hit. What am I advising my clients? Lock or float. But if you have a construction loan, you want me to look at what your lender is quoting you. Email it to me. Or here's a system we have. If you want to send it right through here, go to our website. Okay. Here's a loan estimate review. This is what you can use out there if you're out there searching. Remember, I'm like, okay, I can use one application, one credit pool. I can compare your loan, 30 lenders. Well, if you already got a quote, 2, 3, 4, 5, take the best one that you think you got, upload it into this. What I'm going to do is I'll get a personalized video out to you. We're going to break all the numbers down. I'll go over what our fees are and what the rate's going to be. If we can beat that other lender, make sure it's the best they got. Because if I beat that other lender, I'm hoping to win you as a client. Because I don't want you to go back to them because they tried to hose you in the first place. So that's it for today, folks. So Taz, I will get to it. I'll probably get to you first thing in the morning. I have been doing this all day. I'm actually going to go head up right now, get some dinner. I think I got to cut the grass. I'll probably work a little bit later, and I will be back at this first thing in the morning. So you guys can come back and see exactly, hold on, I got to get there. What in the heck's going on with these and the whys behind it? Sorry, folks, it's been a long day. I know you guys had a long day as well. So I'll see you next time. See you in the morning. And there's the numbers on employment are coming out tomorrow. I don't think there's going to be a shock, but you never know.